Alright, let's start off strong. Imagine a world where credit card points, cashback, and travel rewards disappear overnight. Sounds scary, right? Well, with the UK's plan for a digital pound, this could become reality. Now, before we dive deep into whether the digital pound could end credit card rewards as we know them, make sure you hit subscribe and drop a comment below. Do you think digital currencies are the future of money? Now, here's the thing about the digital pound. Yes, it's been making headlines, but many people still do and really understand what it is, or how it could affect our daily lives. In short, the digital pound, also known as the UK CBDC, is essentially a digital version of the British pound sterling backed by the government. It's different from cryptocurrencies like Bitcoin because it's not decentralized. Instead, it's issued and regulated by the Bank of England, which is the central bank of the United Kingdom. The UK government believes that a CBDC could make payments faster, cheaper, and more secure. Plus, it could help prevent fraud and make financial services more inclusive. But it has also been suggested that the digital pound could hold people's money at a 1-to-1 ratio, meaning that everyone would have an equal say in how their money is spent. So if you've been wondering what the fuss is all about, keep watching. We'll break everything down in simple terms so that you can sound smart when people bring up this whole digital pound thing. So let's talk about how credit card rewards work today. When you use a credit card, whether it's for a coffee, a flight, or a sofa, part of that payment goes towards funding the rewards that you enjoy. These rewards can include cashback points that can be redeemed for gift cards or merchandise, and even perks like airport lounge access and travel upgrades. But where does all this come from? How do these fancy rewards actually get funded? There are a few key players involved. Firstly, there's the interchange fee. This is a small fee that merchants, basically the businesses you're buying from, pay to the card issuers like a bank whenever you use your card for a purchase. So every time you swipe your card at the grocery store, the retailer pays a small fee to your bank. This fee is typically a percentage of the purchase price plus a fixed amount. For example, an interchange fee could be 1.5% plus 20 cents. So if you buy a $100 jacket, the retailer would pay an interchange fee of $2.70. Now those interchange fees aren't super high, but they add up quickly, especially for big purchases. They form a huge pool of money that funds the rewards we love. Secondly, there are interest payments and late fees. Whenever you carry a balance on your credit card, the bank earns interest on the outstanding amount. Additionally, if you're late with your payments, you may have to pay a late fee. Both of these can contribute to the pot of money used for rewards. Thirdly, partnerships with airlines, hotels, and brands also play a significant role. Many cards have teamed up with popular brands to offer exclusive deals and discounts to cardholders. These partnerships allow customers to earn points or get other types of rewards when they shop with those particular brands. So next time you use your card to buy something, remember that a portion of that transaction is contributing to the cashback, points or miles you'll earn later on. Now let's talk about how the digital pound could impact this system. If consumers start paying directly with the digital pound, merchants will be able to avoid using card networks like Visa and Mastercard. This means they won't have to pay those pesky interchange fees, which, as we know, make up a big chunk of the money used to fund rewards programs. With fewer fees to worry about, there simply won't be as much money available to fund cashback, miles, or other perks. As a result, banks will have less leverage to offer these enticing benefits to their customers. In fact, they might not be able to offer any rewards at all. It's possible that credit card rewards as we know them could disappear, leaving us with only the option of paying with cold hard cash. And here's the kicker. We might not even get a say in this. It's entirely possible that the digital pound could take off without any consultation or say from the general public. And then one day we wake up and realize that the way we pay for things has changed forever. In Australia, where a similar system called Peto has been adopted, some merchants were paying zero in fees. This meant that the rewards and points system was way weaker than it had been before. Even in Europe, where interchange fees were lowered as part of the PSD2 regulation, credit card companies had to cut back on rewards. So you see the trend here. Fewer fees, weaker rewards. It's a numbers game. The digital pound could go either way. If the UK government decides to go ahead with the digital pound, it could spell trouble for credit card rewards. But it's not all doom and gloom just yet. There are a few factors that could save our beloved rewards programs. Here's one. Banks and fintechs could decide to buck the trend and keep offering great rewards, even if the digital pound becomes popular. After all, competition is fierce in the financial world, and firms do want to lose customers over something as silly as a CBDC. They could also decide to offer hybrid models where you can use the digital pound for everyday purchases and still earn rewards on top. Second, merchants still want to incentivize certain payments, especially for big-ticket items. This means that even if consumers use the digital pound for most transactions, there will likely still be plenty of opportunities to earn rewards for those who know where to look. Third, the digital pound could lower fraud, which means banks could save money and pass those savings on to their customers in the form of better rewards. Fourth, the digital pound could open the door to cool new rewards. The data collected from the digital pound could be used to develop hyper-targeted AI-driven reward system that cater to your specific spending habits. So instead of earning generic points, you could get stuff you actually want and use. This is already happening in China, where the digital yuan has been linked to social credit scores and personalized rewards. Fifth, there are simply too many unknowns to predict what will happen for sure. Will rewards die? Will they evolve? Will they stay the same? Who knows? But one thing's for sure, it's going to be interesting to watch. Whether the digital pound ends up being a flop or a game changer, there's no denying that it could shake up the way we pay for things. And hey, maybe it will all work out for the best. Maybe the digital pound will usher in a new era of awesome rewards and financial freedom. A guy can dream, right? But let's be honest, the digital pound isn't going to affect everyone equally. Some people, especially those who aren't tech savvy or don't have access to the internet, might struggle to adopt this new currency. Additionally, travel hackers and cashback lovers might lose some major perks if credit card rewards disappear. And if the UK goes digital, it might set off a chain reaction, nudging other countries like the EU and the US to explore their own CBDCs. Before you know it, we could be living in a totally cashless society. The digital pound is a game changer. It could redefine the way we spend, save, and invest our money. As the UK takes this bold step, we can expect other nations to follow suit, each bringing its unique spin to the concept of CBDCs. India, with its massive population and bustling economy, has already made significant strides in developing its own digital currency. Meanwhile, Nigeria has become the first country in Africa to launch a CBDC, setting a precedent for the rest of the continent. Here's the deal. Don't wait on the sidelines. Hit that subscribe button right now and join the movement. Drop a comment below. Do you think digital currencies will replace credit cards? And hey, if you want to stay ahead of the curve, check out these videos.